Good morning, traders and investors. Hopefully everyone had a great long weekend. If you're in the States with July 4th, we had an awesome day off here on the beach, the kids and sailing and all of that stuff. Anyways, let's jump into the charts. Today we've got a little bit of fear in the market. I think we're going to have a lot of jitters and stuff around tariffs this week. I think Friday, Trump said there's going to be 10 to 12 countries who are going to get letters on tariffs, on tariff rates. All kinds of stuff going on. We're definitely seeing Tesla, some fear with that. Feel like those two, Trump and Elon, are kind of butting heads, and we're seeing Tesla down fairly sharply this morning. Where do we? It's down about 5% this morning, 5-6%. So there's obviously going to be some fear around that space there. Tesla definitely will pull the market and sway it around, but the equities market as a whole, let's just go through the small cap. If we take a look at the Russell 2000, it's had a series of rally, pause, rally, pause, rally, pause, which are a series of small bull flags. It is still holding up very nicely, running up the 5-day moving average. It is primed and ready to continue to push higher. If we look at the Dow, which we don't look at too often, which is funny because I only used to follow the Dow and I only day traded the Dow futures. It's funny, I never use it or look at it anymore, but it's the same thing. We've got it running up the 5-day. It's a high momentum move, an explosive move. Actually, it'd be interesting to see Fibonacci-wise where this market, the Dow is moving to here. It does have potential to keep pushing higher. Is that going to hit some all-time highs? So the Dow could push up here, and it is in striking distance of breaking these highs and pushing even higher. So based on just where it is right now, pre-market looks like it could run 2.5% to the upside and continue to kind of mature there. If we look at the S&P 500, very similar type of price action. Again, it's already in new all-time highs, running up the 5-day. And if we take a look at the NASDAQ, which is down, both the large cap, the NASDAQ, and the small cap, the Russell 2000, are down about 0.5% this morning. But again, overall, the chart is very strong, and don't get too caught up in the news and what's going on. Let's just follow price. The news will suck you in, chew you up, and spit you out, and make you fandangle your trades, move them around, and probably get on the wrong side. So let's just let the market do what it's going to do. And whatever gains we get out of our trades is what's going to happen. If we do take a look over at our trades, you can see here with the S&P 500, we are long. It's up fairly nicely here, up about 10%. With our ACS strategy, we're up about 10%. With our band strategy, we're up the 2x, so we're up about 20% with that one. With the QQQ, up very nicely. It's outperformed, continued to run higher. It is up about 14%, and again, we're up QLD with our band strategy, which is a 2x, up about 28% on that one. So we're just letting these continue to mature and run, and not letting the news get out of our way. If we look at the sentiment chart here on the right-hand side, we've gone from a bullish environment. Eventually, it turned bearish. And then we saw deep red bars, which means people are dumping shares, tons of fear. And then it's put in this high volatility bottom, and it's really hard to see, but we got deep green bars here. Deep green bars are a sign that money is piling in. It's moving into the space. People are very, very bullish, which can be a contrarian indicator, but when we just look at it from a bias standpoint, we're not looking for short-term turning points. We're just either money is flowing out of the market or it's green and it is flowing in. And so we're deep in the green right now, and that's the side we want to be. We want to be long. We want to be betting on higher pricing still, even with news coming down. There's always news coming that is bearish and scary, so don't get caught up into the news. Let's take a look at bonds real quick, down about 0.4%. They've had a nice move up, but they're starting to give back some of those gains, picking up speed. To the downside, it could very easily unwind and move lower. I think what's going on with the tariffs, I think everything is connected in some way. So depending on how the tariffs unfold and the rates could create inflation, who knows, could lead to interest rates staying high or going higher, which if that's the case, then bonds could go lower. So everything here is going to be moving this week, I think, quite a bit. and we just need to be prepared mentally for volatility and price swings, positive and negative, for our positions. Now, if we take a look over at let's take a look over at gold real quick. We do have gold and silver lower this morning. Gold's down 0.6%. Again, it's just consolidating in this pattern. It's had multiple times where it's consolidated for many months. It consolidates and eventually breaks out. It's consolidated for many months, broke out. It was still in consolidation phase. It is still pointing to higher pricing based on the long-term trends and just this bull flag pattern that's unfolding. If we look at silver, down 1.5%. Again, silver, noisy chart. It's always a noisier chart. I'm not a big fan of kind of these little double tops that it likes to put in. You can see it likes to have these pushes, these kind of double tops quite often, and usually it gets followed by some selling. But in the grand scheme of things, we'll just got to let it continue to mature. It has rallied, it's paused, it's rallied, it's paused. And again, if chaos hits the stock market, then I think it will favor precious metals, gold, silver. Miners might do all right. You never know if they're going to rally with the stock market or go against it, against the overall trend. If we do take a look at miners like GDX, same with GDXJ and SIL and SILJ, noisy charts, they are all in an uptrend though. And if gold and silver take off, we could see them move higher. But again, to me, the more solid, more likely play of making money on the trade is going to be gold, and then it would be silver, and then miners. Miners are my last choice in the precious metal space, simply because if the stock market does crash, gold miners are stocks stuck in the stock market. And when the stock market tide is going down, you don't want to be holding stocks. Which kind of leads us to the big picture. If we take a look at our ACS strategy, you can see our different trades through here. This is just for the SPY, but we have the same for the QQQ, a few different trades as the QQQ moves a little differently. But as the bars go red, we move to different assets that can allow us to pull more money out of the markets, different ETFs as the market falls. And it's important to understand if we're in a rising or falling tide environment. You can see here we avoided the big crash. We were able to still grow our accounts as the market fell because we moved to a different asset class. And then, of course, we've been long. I just showed those positions. We're continuing to just ride this market higher. And the key thing is to understand the overall market trends. When we look at our long-term investing trend analysis, this is the COVID crash over here on the hard left. More or less, you need to know when the new bull market or rising tide environment happens. You also need to know when a bearish or falling tide environment happens. You don't want to be holding stocks. And then, of course, you want to know when a new bull market starts or a new rising trend. Of course, we had a market turn around here, and then it's flipped back up, and we're back into another uptrend. So we'll see how this unfolds over the next several weeks, and if the stock market is going to be able to hold its ground, or if it is going to eventually stall out here and have some type of reversal. Potentially tariff stuff kicks back in and we go all the way back down, or potentially break down into a stage 4 and go a long way down potentially. What we have going on right here could somewhat similarly be back over here. This area actually was very similar to right here. They were almost identical in terms of how asset classes were performing and moving and momentum and cycles and all that stuff. Now we're back pushing up to kind of all-time highs, but we're getting back into this type of scenario again. And I think it's just going to be a matter of time before we have a big sharp reset. And of course, we just need a catalyst for it, but we never know what or when. So we don't try to pick a top. We just continue to ride the market as it rolls over. We start to get out, and that's exactly what we did over here. Stock market starts to roll over, and we just get out and move to a different play. Let's take a quick look over at Bitcoin. Bitcoin holding up in this big bull flag pattern. If the stock market does continue to push higher, I believe we will see Bitcoin push higher. We are long IBIT with the band strategy. Now, I'm not trading the band strategy myself. I'm trading the ACS, but those trading the band strategy were in IBIT, which is up nicely. We've hit 2 of our price targets, and now we're just letting this continue to run and mature. If it does roll over, we just move out of it. And we'll be able to lock in just a gain with what we have already. But overall, this is continuing to point to higher pricing. We just need to see if the stock market is going to push higher. And if it does, Bitcoin should continue to be favored for higher pricing. Now, somebody asked about this ETF here, Block. Wanted to know what that was. That is a blockchain leader. So this is stocks and companies that focus around blockchain technology. You can see how it's at a very big move. It's top of our list. It's top performing. I kind of look at this ETF kind of like, if you take a look, let me see if I can just draw here. You can see it's been a fairly significant move to the upside since the stock market went favorable to buy the leading sectors. And more or less, blockchain is kind of like, Bitcoin would be gold and gold miners would be like blockchain. So if blockchain is breaking out to new highs, it's already had this bull flag pattern here. It's breaking out and extending. It's leading the way. That might be a leading indicator that Bitcoin is going to pop and break and follow suit. So we'll keep our eyes on that. We've seen that happen a few times before. But they're not, it's not quite exactly the same relationship as Bitcoin. But overall, this is still an interesting way to see where that the bias there. And you can see we've had some big spikes of green volume. If you look at this blue line, this is on balance volume, showing that more or less there wasn't a whole lot of interest in the space. And then suddenly, boom, we've got accumulation and people are accumulating and buying blockchain stocks. And that's why we're seeing it really push and move higher. So that'll be an interesting space to keep an eye on. Again, if we take a look at the ARK ETF, ARK-KK, but pretty much all the ARK ETFs are the same. They've had big moves to the upside. Percentage-wise, they're leading the way. And this is people getting excited about these stocks. But when you look at the big picture of this whole phase, you go from stage one to a blow off euphoric phase to a crash to a complacency move, people thinking this is going to go higher. And then, of course, it breaks down and they lose their shirts and they go years and years. And a lot of cases, a lot of these stocks, and these can take even much longer, but to recover, may never recover. It is definitely making a series of higher highs, higher lows, but it feels stretched to the upside. It is really at this critical pivot point on the chart. You can see a huge oversold bounce, big volatility, a breakdown. Let's just zoom in a bit more. Breakdown, I'll draw a line across here. Sorry, guys. You can see it's very significant level, huge volatility here. It broke down, bounced back up, hit its head, came back down, came back up, and then got rejected and crashed even more. So obviously, this is a really significant point on the chart. If you just look at this price action and we take a look over at our overall stage analysis, maybe I can just squish it over here if I can get a hold of it. Here is the stage analysis. We have a stage one, we have a stage two bull market, we have the blow off euphoric phase, we have the breakdown, the complacency, the topping phase, and then it goes into a full on bear market. And of course, the stocks that lead the most going up, which the ARK ETF was like the leader, whatever goes up the most generally also is going to be the one that it falls out of favor. And if we take a look at, I say euphoric phase, and I say that because that is a level here where everyone thinks they know what they're doing. Everybody piles into the stock market. Everybody makes money temporarily, but eventually they hold because people don't have position management in most cases. They give back their gains, then they take a huge loss. As they fall here, they realize, I'm down too much. I'll just wait for it to come back. Problem is 5-10 years later, it really doesn't come back, or you might make it back, but that is a ton of wasted time. You can make money every year from the markets, and you don't need to hold on. You're best to bite the bullet, take a loser. But anyways, that's kind of it for the day. We'll see how that unfolds and how tariff talk continues to sway the markets throughout the session. And we'll talk soon. Bye-bye.